and today he's going to talk about IUL with the long-term care and also the Transamerica term with the LV.
Okay.
And coming from the provider is a little bit different,
Yeah.
right? So please take good notes. Now let's recognize only one guest. Recognize those who brought guests and guests show up. Okay, so Swati, you have one. You have one. All right. So now in the future, I know you did mention that before and mentioned that dress professionally. You know, everyone's definition about the professional is different. So you want to say professional, business professional, no jeans, no tennis shoes. You know what I mean, right? And because some professional they dress like a jeans to work, they think it's a professional. So kindly tell them this is professional, no jeans, no tennis shoes. All right. In the past 7 days, let's recognize who done something. Like for example, you have brand new business partner recruits, or you have field training appointment, KTP, or one-on-one appointment in the office, or stop by, drop by. Okay. So stand up. Whoever had appointment activities. Yes, even phone call. Sometimes you do phone calls, Skype appointment with like people from out of state. You don't see them in person, but on the screen, right? All right. So Blanca.
Well, I had like 25 calls, and out of that, I'm going to be having about two confirms for this Saturday, and I have one-on-one for Sunday. So that's pretty much what I have already have right now.
And you mentioned in the pregame saying that you try to connect with people who you haven't seen for 38 years.
38 years, that is right.
You still have contact info. It's amazing, right?
Yeah, I'm connecting with all friends because I think that everybody deserves to hear what we have. Everything that we have has a lot of value. And I feel really very excited that I can pass that to anybody that is in my circle.
That's good. That's good. Awesome. Keep a hand. Lucia, how many appointments you had?
One.
One. Which is? You have new business partners here.
Yeah.
I want you to introduce yourself later on, okay? So, Mister?
I had one follow-up appointment. We didn't get a policy started yet because we didn't want to touch or anything, and they just wanted to think about it. But we have tomorrow confirmed for going forward with the policy.
That's good. Awesome.
All right.
Wanda?
So I think Ray had 5 appointments.
Wow, you keep track of it, eh?
Well, it's kind of in my head really quick.
That's awesome. All right. Okay, who else? Like Lum? I don't remember.
I think we had. I was trying to look, but then I'm like running around. So around 10. 10
Around
appointments.
10. And also we have we met with some of the teammates to go with the business plan too.
Right.
So app, I think we had 2 or 3.
And then the
I
trial
don't
app.
remember trial app too. Yeah, this big trial app yesterday. They funded like they're going to fund 100,000 a year, right? And it's 80,000 from Impact Life. Just looking like the competition.
You didn't hear that.
Okay. Okay, so that's for business executive. It's a little bit different. All right. So and who passed exam in the past 7 days? Not yet, right? Lucia's going to take exam soon. Okay. Well, let me see. I think everyone passed. Jackson, you start studying for the exam, right? Okay. So any special recognition? Any special recognition? No? All right, Long, you want to start and take over?
Yeah. All right. How's everybody doing?
Good.
Great.
All right. We are in for a treat today because we actually have someone who is very experienced coming from Transamerica. You've been with them for over 10 years, right?
Yeah, 15, yeah.
15 years, you know, and Caesar has actually trained us in multiple different areas, locations. I think currently right now is your regional VP.
Right.
Regional VP right now, Transamerica, very knowledgeable about the products and services, but more importantly, he's very passionate about what we do. So I've had the pleasure to listen to him talk, and you guys are in for a treat. So I really want you guys to give a big round of applause for Mr. Cesar Diaz, right? Cesar Diaz.
All right. So first off, let me introduce myself. My name is Cesar Diaz. I've been with Transamerica for over 15 years. I had the pleasure of being Lamb over at convention, a couple of weeks ago. As a matter of fact, I'm barely getting my voice back. It was gone for about most of this time, up until a couple of days ago. But I do want to make sure that you guys understand that even though I've been working with Transamerica for over 15 years, I've only been working with WFG for about 4.5, 5 months. But in that short time, I've got a chance to actually meet some of the great leaders like Lamb and Lena and David Lynn, of course. And it's because of them that we've been actually able to help out on average 100,000 families per year for the last 3 years straight. So first off, I want to say thanks to you guys, because without you guys, that would have been possible. So thank you.
Perfect. You open it right now while you're talking.
Yeah.
This is the, I plug this in. Perfect.
It's like months ago. That's fancy. All you gotta do it once. If you do that one. Do that one.
Is it a PowerPoint?
It's a
He looks.
Oh, that works.
Awesome. So one of the things that I did want to mention that we actually talked about when we were out there at convention was the Red Shoe Club. I'll just mention that before we get started with the presentation, just so you guys are a little bit familiar with that. Basically, the Red Shoe Club is just a program where we're actually rewarding or recognizing the top 100 producers. We also do recognition for the top SMD base shops, top 5 rising stars. We're also doing recognition for most families helped. Thank you. So just want to make sure you guys are aware of that, and at the end of this, I'll make sure to send that email over to Lamb so that he can send that out to you guys so you guys are aware of that. Basically what it does though, this recognition program, what it allows you guys to do is, number one, as soon as you guys become a member of this program or this club, you'll get a chance to order some customized Nike red Nike shoes. How many of you guys were at convention, by the way? Pretty much everybody. Awesome. So I'm sure you guys saw some of us walking around with suits and red shoes. That was us pretty much making sure that everyone recognized Transamerica and we were trying to do. What that actually does, what that gives you guys, having those red shoes, being part of that club, allows you to skip the line for our booth. Before, when I would say skip the line at convention, everybody got excited because they thought that they could actually skip the line to the whole convention, just for our booth. But that's a great thing because you'll be able to actually get some special swag, some special gifts, some special giveaways that not everybody else is available. It's not available to everybody else. And like I said, again, you'll be able to skip that line. In this time that I was with Transit Worth, the first time that I was at the convention, obviously, I didn't realize how big it was and how long those lines really get. So I'm sure you guys can appreciate being able to actually skip some of those lines. And then, like I said as well, you'll get to order your own customized shoes for yourself and for your spouse. You'll also get to have, like I said, some special bonuses throughout the year. By the way, the qualification period is, we already had the first one, which is the first of the month, the first of the year, all the way through June 30th. And the people that became qualifiers at that point, already you saw them. If they weren't working with Transamerica, you already saw them walking around convention with the red shoes as well. So they already qualified. Now we have the second period starting, which is July 1st, all the way through the end of the year. Now that means everyone that qualified that last period, they get to start all over again. So does everybody else. So everybody starts out with a clean slate. So you've got an opportunity to again become a member. And by the way, for the top 100 producers, the least amount of production was 60,000 target premium for 6 months. So that's not bad. I mean, that's pretty much everyone here should be able to qualify. So just wanted to make sure you guys are aware of that. Make sense? Yeah. That's not bad. I mean, that's pretty much everyone here. Let's go. I got an echo. So let's get started. How many of you guys are familiar with the FFIUL? Cool. Yeah, that's good. About half the team, which means that the rest of you guys aren't too familiar with it, which is good. This is the whole point of me coming out and actually doing some of this training, just to be able to give you guys some of that insight, some of the information on our particular solution. So our FFIUL is it's a traditional IUL product. It offers, just like everything else, it's just like the other IULs out there. It offers the ability, obviously, to provide a death benefit, the ability to take out loans and withdrawals, but a couple of things that are unique to us, and I'll give you this information now, even though we're going to go through it later on. Some things that are unique to us is the fact that we actually have the ability to add the long-term care rider along with living benefits. That's pretty much unique because no other carrier can do that. They either do one or the other, living benefits or long-term care. Another thing to mention that's unique to us is our high cap. The global index account has a cap of 15%. That's the highest in the all of the other carriers that are within the WFG platform. Now, please, what you should keep in mind is that it's the highest without having to pay an additional charge. And also another thing to mention that's important is that when the FFIUL was first introduced back in 2012, the cap was at 13.75%. Since then, Transamerica has actually they've actually increased that cap to 15%. We've never lowered it. You'll know, I know you guys will know right now, I believe either National Life or possibly PAC, or I'm not sure which other carrier was National Life. Yeah. They actually lowered their cap. So it's always important to note they did. Or, wow, that's interesting. So keep that in mind. When you're looking at either just comparing different carriers, keep in mind how often they've lowered their caps. And also another thing to keep in mind is don't just pay attention to how the policy performs, the cash value they're going to have in the future, because all that's doing, remember, illustrations are just that. They're illustrations. They're a forecast of how a policy would perform if everything stayed the same at the rate that you illustrate. What you want to pay attention to are the historical rates, the look-back periods. That's what you want to take a look at. That's what you want to pay attention to. When you're running those illustrations, you'll notice that every single illustration from every single carrier should have historical rates in there. And you want to pay attention to what that average has been. So one of the nice things about Transamerica's IUL or FFIUL, and I know I haven't even started with the presentation yet, I'm just giving you guys some of this information up front so you guys have this as we go through, is the illustrative rate. Transamerica has the highest illustrative rate of 7.75%. And there's a reason why that is. It's because of that historical look-back rate. Prior to last year, the average was 8.6% return. Since last year, because last year was a really bad year for everybody, just across the board, it dropped to 7.92. But even with that, we've still been able to keep that high illustrative rate of 7.75%. So just keep that in mind when you're comparing us to another carrier or comparing another carrier to us. Make sure you pay attention to those historical rates. Make sense?
Yeah.
Mm-hmm.
Awesome. So let's see here. Let's get started. There it goes. So another thing to mention, Transamerica has been around for over 100 years. We've actually started back in 1906. A couple of good things to mention that aren't included in this slide is that Transamerica was one of the first carriers to introduce universal life to the marketplace, as well as index universal life. Prior to that, the only thing that existed in life insurance was whole life and term insurance. So it's important to note that Transamerica is one of the pioneers in the life insurance industry that started universal life and index universal life insurance. We've got some of the strongest ratings out there. Another thing to make sure to pay attention to when you're talking to your clients, when you see them across the kitchen table, make sure that you express and you actually notify them or that you advise them of the strong ratings that we have. I do like this slide. I don't like to give out too much of the jargon that Transamerica tries to put out. What I like to do is include information and statistics that you guys can actually use and can actually be proven and can actually be verified. A lot of these slides, a lot of the statistics and data that I'm going to be presenting, I want you to make sure that you guys recognize where it's coming from So that this way you guys can actually go back, and encourage you guys actually to go back and look at some of these websites, some of these sources, and pull some of that information out yourselves. But this slide is really important, and I think it's important to note that 54% of families would feel the impact within 1 year or less if the major breadwinner was to pass away or become incapacitated. That's within 1 year or less. Within 6 months or less, 48% of families would feel the impact. I mean, those are pretty unfortunately important statistics that we have to keep in mind when we're talking to our clients. This way you can actually drive the point of how it's necessary to actually have either a life insurance product or a life insurance product with the ability to have those long-term care riders or those living benefits. Make sense? Also, 40% of families say that financial matters cause them the most stress in their lives. We can also add to that, there's a high percentage of families that probably, and I'm not trying to make a joke out of this, but sometimes a large percentage of families have suffered divorces because of financial matters. Does that make sense? 23% say that job security that better job security would most help them achieve their future financial goals, and 21% say lower healthcare costs would help them the most, obviously. By the way, one of the things that I do like to mention when I'm talking about this is the high cost of medical care. First of all, it's super expensive, right?
Yes.
Then on top of that, put yourself, maybe just think about your own families. If you did not have a product like this or a life insurance policy that offered either long-term care or living benefits, how would you be impacted? How would your financial, how would you feel, or how would it impact you if you were to suffer, you or someone in your family were to suffer a medical emergency? You know, think about, now I'm not just talking about just a broken leg, a broken arm, or maybe going to the hospital because someone has asthma or an anxiety attack. I'm talking about something major. You know, God forbid something happens, someone in your family either has a stroke or maybe even cancer. Some of that is severe. So when someone goes to the hospital for that, obviously a lot of us, or not obviously, a lot of us have medical insurance. But even then, a lot of the cost isn't covered by our medical insurance. There's a lot of out-of-pocket costs that we have to cover. So if you didn't have some sort of ability or some sort of assistance to help you pay for those medical costs, how would that affect your finances? I mean, to tell you the truth, if I didn't have something like this available and something happened to my kids, or something happened to myself, it would absolutely bankrupt me. So, I mean, that's something that you want to think about. And also not just for yourselves, but think about that. Put yourselves in your client's shoes. When you're sitting across that kitchen table, make sure you reiterate that. What would happen to them should they suffer a medical emergency financially? So just think about that. So one of the things that I like to stress when we're talking about life insurance or the FFIUL in particular is, number one, see, a week before I went to convention, there was a news article that came out on the TV, and I don't know if I'm sure some of you guys may have seen it. I mean, I live out here in LA, so everybody else would have seen it too. I don't know if it was Channel 5 or Channel 9, but they had mentioned there was a lady that was celebrating her 106th birthday. So people are living longer. Anybody here actually know someone who's already reached the age of 100 or beyond? Wow, that's awesome. And you guys actually know them.
That was my great aunt.
Wow, that's awesome. That's awesome. Congratulations. I wish I knew someone like that firsthand. I've only gotten to hear about it from the news or from the radio or something like that. But that just drives the point home even further, which is people are living longer. So it's no longer about being able to offer them a death benefit, but being able to offer them some sort of assistance so that they can actually have a better quality of life in their older years. Does that make sense? For them to be able to tap into that cash value of that policy so that they can use to either pay for medical bills or just pay for a vacation that they would want to take. Make sense? So that's what this slide actually stresses. What happens if they die too soon? Obviously, the death benefit with any life insurance product, right? The last two are the ones that we really want to pay attention to. What happens if they live too long, which is what we were just talking about, right? We want to be able to cover them, offer them some sort of protection or some sort of assistance so they can actually tap into that without actually having to bankrupt them. And thirdly, what happens if they become chronically, critically, or terminally ill? That's where the living benefits of the long-term care rider come into play. Make sense? And one of the things I do want to mention is, does anybody here either work in or has worked in the past in the medical field? Nurses, doctors? Oh, great. So you guys have firsthand knowledge about how expensive, obviously, medical care can be. But also, do you guys know how standalone long-term care works?
Yes.
Great. So first, so you must know then how expensive long-term care can be, right?
Oh, yeah.
Another thing to mention, long-term care, standalone long-term care is very, very expensive. Secondly, the premiums for standalone long-term care policies are not guaranteed. They can and they will go up. As a matter of fact, in the 4.5 months that I've been working with WFG, there was already been a rate increase. And when one carrier does it, they all do it. Another thing to mention, and this is, again, I encourage you guys to look into this. Another thing to mention is that standalone long-term care policy carriers, there aren't that many left. There's, I believe, less than 10, maybe even less than 5 now. Prior to coming back to work with Transamerica, because I started working with Trans in 2017, and then I started working, and then at that time, I started working with a general agency. I was actually able to work with several different carriers that offered long-term care. Transamerica was one of them, Mutual of Omaha was another one, and then Genworth was a third. Genworth was having some issues, so we actually stayed away from them, and we were only dealing with Trans and Mutual of Omaha. And I can tell you right now, those premiums are very expensive. And those clients, whenever we were talking to the agents, we made sure that they knew and that they notified their clients that those premiums were not guaranteed. They can absolutely go up, and they have gone up ever since. So having a life insurance policy with a long-term care rider or living benefits associated with it is a great benefit to your clients, and it's also a low-cost alternative to having a standard long-term care policy. Now, by no means does that mean that you should shy your clients away from buying a long-term care policy. If they have the means to afford a standalone long-term care policy, let them do it, let them get it. But ask them to make sure that they have something like this available as well, so they can tap into these resources. For instance, one of the things to mention with a standalone long-term care policy is that if you don't use those benefits, you lose them. Although the majority of people are still going to use them, because statistically, nowadays, I mean, people are actually going on claim younger than before. But should that person get lucky and not actually have to use those benefits, they're going to use all the premiums they're going to lose all those premiums that they paid. Whereas if you have a life insurance policy with those benefits, if they don't use those benefits, their beneficiaries will, or they're going to be able to use it for cash value, or actually, as loans or withdrawals. So, I mean, they have other uses for that with the life insurance policy. Does that make sense? And this slide here, this talks about the kind of like the 4 pillars of our IUL. And I'll tell you the truth, I don't like to sugarcoat anything. I like to be transparent. 3 of these are standard with any IUL. Only one of these is unique to us. The federal income tax-free death benefit. That's standard with any life insurance product, right? The 2 index account options. Typically with an IUL, you will have at least 2 account options, S&P or the global index. You may have more, but you will always at least have 2. Make sense? Thirdly, the tax-free loans and withdrawals. Standard with any IUL. What is unique to us is this second bullet, or the second globe, which is, and this should actually say, a guaranteed positive minimum interest rate or floor. Now, you guys heard me talk about earlier, or mentioned, that we had the highest global index rate of 15%, right? Mm-hmm. Transamerica is one of the few carriers, actually one of 2 carriers on the WFG platform that offers the 0.75% floor. So we have a positive floor Every other carrier has a 0% floor. So that's huge. That's something you definitely want to take into consideration when you're looking at comparing different carriers or different IUL products. Make sense? So again, this is what I was referring to. You've got your 0.75% floor on both the global and the index, and then that high cap on the global index account of 15%. On the S&P, it's at 13.75%. I do get asked quite often, which is the question, which is, have we found out whether or not Transamerica plans on lowering their rates or their caps anytime soon? From what I can tell you, we haven't heard any of that. We've been going strong since we introduced the product back in 2012. What I will tell you is that we are expected to release a new version of the IUL soon. We hope to have done it by the middle of this year or by now. But unfortunately, where there were some new regulations that are coming out that we had to postpone that. So we're holding on. We should be able to introduce it beginning of 2020, maybe possibly the end of this year. But either way, these caps aren't expected to go down. Make sense? This slide here, and again, I do encourage you guys to go out to the CDC's website to gather some of these statistics. This slide right here really hits home for me, and I'll give you some information on that once I'm done. But it's important to note, and this is something you really want to bring up to your clients when you're talking to them across that. Make sure you mention this because it really does drive the point home. Every 40 seconds, someone in the U.S. Gets hit with either heart disease or a stroke. Every 30 seconds, and this is the one that hits home for me, every 30 seconds, a new case of cancer is diagnosed in the U.S. Now, luckily nowadays, if we catch cancer early enough, we can beat it, but not all the time. And not too many forms of cancer can actually be beaten, unfortunately. And the reason why I was saying that this bullet actually hits home for me, when I first started working with Transamerica in 2003, I was working on the retirement services side. The life insurance side was only 3 floors above me. I never bothered to learn about life insurance. All I cared about was, number one, having a job. I had just moved back from Arizona, so all I wanted to make sure was I had a steady paycheck, that I had a job. That obviously I had a job. I had health insurance for me and my kids, and that was it. All I tried to learn about was retirement plans, how they work. A year later, my dad ends up getting diagnosed with cancer in 2004. They had given him 6 months to live. Luckily, he was able to live 2 years. But when he passed away, my dad, and also another thing to mention, in our culture, the Mexican culture, we really don't think too much about life insurance. We'd rather put the money away under the mattress, which is just something that I'm sure you guys hear about all the time. And so my parents or myself just thought that we couldn't afford life insurance. Life insurance was too expensive for us. And number two, we didn't know what you could do with Index Universal Life. Come to find out, when I got when I got the job on the internal sales desk with Transamerica and I started learning about life insurance, then I could have really helped out my family, because then my mom would have ended up with more than just $1,500 after my dad passed away. If I would have known how affordable life insurance can really be, we could have really helped out. But unfortunately, it's a learning experience, and that's something that luckily my mom's okay. My sisters and myself were able to help out my mom. We were already of age where we were all working, obviously, so we could actually help her out. But again, it's just something, the education factor is there. The fact that there's such a large population in the US that doesn't understand how affordable life insurance can be and how necessary it is huge. So that's another reason why I do like coming down in the evenings to give these trainings. Saturday mornings, I don't mind it, because it's important for me. It's a goal of mine to make sure that you guys have the information that you need to be able to educate the public about what's available to them. And one of the other things that I like to mention is that even though I work for Transamerica, I would love it if you guys pushed our products. Absolutely, that would help me out. But the reality is that this isn't a silver bullet. This isn't a one-size-fits-all. the nice thing about working with WFG is that you guys have different carriers. You guys have a menu, a portfolio of different products you guys can offer your clients, different solutions. And if I can help you guys offer the right solution to your clients, that's fine with me, even if it's not Transamerica. Make sense? Awesome. So, and this is what I was talking about earlier. 7% of workers in poor health are extremely confident they will have a comfortable retirement. Only 7%, compared to 49% of workers in excellent health. Another statistic that I read in from 2018 said that less than 60% of families in the U.S. have some form of life insurance in their families. And it said that 40% of those 60, of less than 60%, 40% of those people, 40% of those families said that they were underinsured. And I guarantee you that 40% were people just like my family, like my dad. My dad, the only insurance he had was the group term insurance he had through his job. So I guarantee that 40% was part of that. Make sense? 70%, and this is what I was talking about earlier. There's a 70% chance that someone turning age 65 today will need some type of long-term care service and support in the remaining years. And that's true. These are statistics that you can actually look up and verify. So that's why having a life insurance policy with a long-term care rider or with living benefits riders is huge, and it's really important to have. Now, let's talk about, and one thing that I forgot to mention earlier was that whenever you hear someone talking about long-term care, a long-term care rider or living benefit riders, make sure that you separate those two in your mind. Right away, right off the top of your head, always make sure you separate them, because understand, with a long-term care rider, there's a charge involved. There's a premium involved for that rider. There's a rider charge. Make sense? With living benefits, there is no charge. You can add it onto that policy, and there's no charge until the client goes on claim. And that's important, because when the client goes on claim, that's when the carrier will take out their fees. They'll take out their charges. And we're going to talk about that at the end this week, because I've got some really good examples that really bring that point home. And you can actually show these examples to your clients when you're talking to them. Make sense? So with a long-term care rider, what I had mentioned earlier, it's typically a lower cost alternative to a standalone long-term care policy. Also, the maximum limit is $2 million. Prior to this version of the IUL, it was at $1.5 million. So we've increased it at the beginning of the year. It's a modified indemnity model. That's how we pay out the benefit. And this is important also to know. When you're looking at different carriers, let me actually, before I even say that, with a standalone long-term care policy, those benefits are paid out on a reimbursement basis, which is the same as other carriers would pay out their long-term care rider. They're paying out on a reimbursement basis. Client has to pay those medical expenses out of pocket, and then they submit those receipts to the carrier. The carrier then has to verify that those receipts, the medical expenses can actually be reimbursed, and then they'll go ahead and reimburse the client for those expenses. Indemnity means that the carrier, Transamerica, will pay out 2% of that death benefit on a monthly basis. There are other carriers that will pay out more than 2%. Transamerica is limiting their benefit to 2% on a monthly basis, which is 24% annually. Another thing to mention, and this may be a little bit more technical, but I think it's important to mention that there's something called a HIPAA per diem. What that means is that there's a maximum amount on a monthly basis that any carrier can pay out. As of right now, the HIPAA per diem is at $370 per day, which is $11,100 per month. If you pay more than $11,100 today, anything that's paid up more than that will become taxable. So you want to make sure that even though there are some carriers that will pay out more than 2% or more than that HIPAA per diem, that they're actually they're making their clients incur a tax consequence. Make sense? Transamerica, though, we're going to limit our benefit amount either to that 2% on a monthly basis or the HIPAA per diem maximum. So if you've got a client who actually has a $2 million policy and they go on claim today, we would only be able to pay out $11,100. Does that make sense? And by the way, ours is a modified indemnity model. I always like to make sure that people know what this means. What that means is that at the time that the client goes on claim, we're going to request a plan of care from their physician. You have to send us a plan of care, meaning my patient has to go either physical therapy or has to go to chemotherapy once or twice a week, whatever the case may be. We want to make sure they're going to follow their plan of care. So what we're going to do is that we're going to request that on a monthly basis, once their claim is approved, they send us a bill or a statement that says, hey, I followed my plan of care. I went to go see my doctor twice a week. I went to chemotherapy three times a month, whatever the case may be. Once we see that, we will go ahead and accelerate that 2%. Now that bill can be for $100, can be for $1,000. It doesn't matter. We're still going to accelerate the 2% or up to the HIPAA per diem. Does that make sense? Also, another thing that's included, and we're not really going into too much detail about this, but now we can actually have the long-term care rider on a policy that has a base insured rider. What that is it's a term rider or a way to blend the policy with a term rider. And we can talk about that later, but just to give you guys a really quick example, let's say you've got a client who only needs $500,000 in death benefit, but that they just bought a house, they got a bargain on a $750,000 home, and they just need to increase their benefit to $750,000 to cover the mortgage for 30 years. But again, they only need $500,000, or they can only afford $500,000. What you can do then is say, okay, Mr. Client, we're going to get the base policy with the long-term care rider for $500,000, and then we're going to add a base insured rider for $250,000, giving you a total of $750,000. But you only have to pay, basically with the base insured rider, they're only paying premiums on the $500,000 plus the long-term care rider charge plus the base insured rider charge. They're not paying for the full $750,000. So it's a way to actually reduce their premium a little bit. And then in 30 years, they can actually call in 10 years, 5 years, even the year later, they can call in to remove that rider. So they're not getting charged for that rider anymore. Automatically though, if they keep it on, the rider will stay on the policy till age 100. But otherwise they can take it off at any time. Does that make sense? And we can go into detail about that later because there are some things that need to be considered when you're looking to add the base insured rider. One thing that I will tell you right now is that if you do decide to add that base insured rider, always try to add it for a minimum amount. Don't go crazy. I actually had an agent that said, let's run me an illustration showing me $100,000 on the base policy and then $900,000 with the base insured rider. Okay, so now client is really only paying for $100,000 in death benefit on their premium. The problem is that the cost of insurance is based on the full million. So as the client gets older, so does that cost of insurance. And now their cost of insurance is going up so high that the premium that they're paying for that $100,000 isn't enough to even cover the cost of insurance. Does that make sense? So that's why you want to limit how much of that base insured rider you're going to use. And what some offices do and what they recommend, and I just like to throw this out there so that people know, sometimes the best thing to do is to actually have two separate policies. You can have the FFIUL with the long-term care rider, and then you can have a Trendsetter LB with those living benefits for that extra $250,000, So that this way, if the client goes on claim, if they ever go on claim, they can exhaust the term policy and still have all the growth on that FFIUL in case they need that again later. Does that make sense?
Yeah.
And again, this is something we can talk about later on. This is just something that I wanted to make sure people were aware of. The way the long-term care rider works. By the way, before we even get into this, I didn't see any show of hands when Lena was asking if anyone had either applied for, I'm sorry, not applied, but made the license, had taken their license within the last 30 days. Has anyone taken their license within the last 60 days exam? So everybody's here has already had their license for a while, right?
Mm-hmm.
Okay, then so you guys are professionals, and I'm gonna quiz you guys then. What are the 6 activities of daily living? Just by show of hands, one by one. Yes. Eating is one, perfect. Dressing, good. Bathing, all right, it's a show of hands, but okay. We got 3. We got dressing. Transferring, continence, and bathing. So those are the 6 activities of daily living, or ADLs. In order to go on claim for long-term care, the client cannot perform 2 out of the 6 ADLs, or have a severe cognitive impairment, Alzheimer's or dementia, basically where they need someone helping them out. So when a client goes on claim, and by the way, they have to be on claim, there's a 90-day elimination period. Basically, you have to show proof of loss. You have to be paying out of pocket. They only have to satisfy the requirement once. So first, client can't perform 2 out of the 6 ADLs, number 1. Secondly, they of course go on claim. Then when they go on claim, there's a 90-day elimination period. And then after that, if the claim is approved, long-term care benefits are paid. And then of course the doctor has to send us their plan of care. So that's how that would work on the long-term care rider. But let's talk about the pros and the cons of having a long-term care rider. Number 1, the cons. The cons are basically there's a rider charge involved. Like I said, like I told you guys earlier, you have to pay, there's a rider charge involved. So whatever the base premium is, you're gonna have to add that rider charge for the long-term care rider. But let's talk about the pros. With the long-term care rider, you know exactly what you're going to get when you go on claim. You're going to get 2% or up to the HIPAA per diem maximum. But you're going to get 2% of that death benefit on a monthly basis, up to 24% annually. Make sense? Mm-hmm. Then another thing to mention is that when a client goes on claim, the long-term care rider charges are waived. Also, they are not required to pay minimum no-lapse premiums. And actually, what this should also be included is that the client is not required to pay any premiums while they're on claim. So, rider charges are waived. Well, the client knows exactly what he's going to get, 2% of the death benefit. Mm-hmm. Rider charges are waived, and the client doesn't have to make any premium payments while they're on claim. Plus, the policy is guaranteed not to lapse while they're on claim. So those are the benefits of the long-term care rider. But again, one of the things that people mention is that, well, with the long-term care rider, you have to pay a charge. With the living benefits, there's no charge. Well, let's talk about that. Let's talk about why there is no charge with the living benefits. Any questions with the long-term care rider before we go on? All right, cool. Actually, before we go on to the living benefits, there are a couple of things here that I want to mention. Does anybody here do business with the foreign nationals? Basically, okay, great. So people who are coming from another country, they visit the U.S., they have business in the U.S., they want to get a life insurance policy. Absolutely, we can definitely do that. The only thing is that they can't get the long-term care rider or the living benefits because the living benefit or the long-term care rider is exclusive to the United States only. They have to get care within the U.S. So we wouldn't be able to approve any foreign nationals. Another thing to mention, another question that I used to get when I was on the sales desk is this first one. If I go on claim, can my cousin, my sister, my dad, my brother, my mom, my husband, my wife, Can they be my assistant, or can they be my provider? Well, I'm not a provider, but can they be the ones that actually help me out while I'm on claim? The answer is no. It has to, even though they may be licensed, a licensed care practitioner, it has to be a separate third party. And the reason for that is because there's been a lot of fraud where people actually claim that this person is helping them out, and there's no one helping them out really, or that that relative might just be signing off on their plan of care just so that it shows that they're actually getting some sort of plan of care, but when they're not really doing that. So that's what that usually happens. Also, another thing that I'd like to mention, and I mean, you can read all of this in the brochure, but I do like to mention some of these things. The second bullet, which is any care that a client is going to need resulting from alcoholism or a drug addiction is not covered. So just keep some of that stuff in mind. Also, especially nowadays with some of the stuff that's been happening with a lot of people committing suicide, if they require care from an attempted suicide, that is not covered either for long-term care expenses. Don't get that confused with the death benefit not being paid. The death benefit will not be paid on a suicide after the 2 years, because there is a 2-year contestability period. So if your client does commit suicide within the first 2 years, there's a contestability period, so we will not be able to pay that out. We'll just pay out the premiums that they paid into the policy. Make sense? So again, with the long-term care benefit, this is what I had mentioned earlier. If the benefits are never used, the full death benefit would be paid out to the beneficiaries. If the client is receiving long-term care benefits and they pass away, then the remaining balance will be paid out to the beneficiaries. Thirdly, if the long-term care benefits are exhausted, which is possible, there is a $10,000, or actually, let me rephrase that. We will stop long-term care benefits, paying out the benefits, when the policy reaches either $10,000 or 10% of the death benefit. At that point, we have to cut off all benefits, and we have to leave that in the policy to be paid out for final expense purposes. And that's what the IRS has deemed, so that this way we can keep this as a life insurance policy. Does that make sense? So there's always a benefit to the life insurance should a client go on claim or not go on claim. Makes sense? As opposed to what I had mentioned earlier, having a standalone long-term care policy. So now let's talk about the living benefits. And again, what I told you guys earlier with the living benefits, make sure you separate living benefits from long-term care in your mind. Living benefits, there's no charge for this. It's free. One thing to mention though, with the living benefits or the long-term care rider, they have to be selected at the time of the application or before the policy is approved or issued. There's only a small window, but you got to make sure you do that. We can't add it after the fact. We are working on adding that availability or that option to add the long-term care rider later, but we haven't gotten to that point yet. I know our team is actually working on that right now. Hopefully we can get it added to the new version of the IUL. But as of right now, it can only be the long-term care rider or the living benefits can only be added at the time of the application or before the policy is issued. Make sense? So with the living benefits, and before I get into critical illness or chronic illness, I do like to mention that the terminal illness, that's automatically included with every single policy, with every single carrier. There's nothing unique to us about that. The only thing that is unique between carriers with the terminal illness is what are the bells and whistles, or how much of that terminal illness will be paid out. For Transamerica, the terminal illness will pay out 100% of the death benefit up to $1.5 million. Other carriers may limit that, and that's where you have to pay attention to the small print, the fine print. Make sure you read that, because other carriers may limit the terminal illness to 75%, 50%. I believe National Life, theirs is at 50 or 65%. So make sure that you read the fine print so that this way you can overcome those objections, or you actually can give your client the better solution. If everything else is equal, make sure that you read everything about the different products. And again, with terminal illness, every single carrier it's automatic with every single policy you buy or you sell with every single carrier. There's nothing more that you need to add. There's nothing you need to select. The only thing you need to select is whenever you're electing the long-term care rider or the living benefits. Make sense? And again, with terminal illness, the definition of that is that the insured has been diagnosed with a condition resulting in a life expectancy of 12 months or less. Pretty straightforward, right?
Mhm.
Now, before I talk about critical illness, I'll talk about chronic illness, because chronic illness has the same triggers as a long-term care rider, which is unable to perform 2 out of the 6 activities of daily living or a severe cognitive impairment. The other difference is that with the chronic illness, it's free. But remember what I had said earlier, when these riders are free, that means that when the client goes on claim, they're going to get that benefit at a discount. What that means, that's just a nice way of saying that the carrier is going to take out their charges. Even though it says that the maximum we're going to pay out is 90% of the policy's available death benefit, up to 1.5 million, the client will never get 1.5 million with a free rider over the chronic illness rider, depending on several different factors. The severity of their condition, how it affects their life expectancy, and how much premium has been paid into the policy. Those will have an impact as to how much the client will actually get to receive versus how much their policy will drop. So really quick example, and we're going to go into more detail about this later, but let's just say the client qualifies for 1.5 million in accelerated death benefit with a chronic illness rider. After Transamerica does all of its calculations, they say, Mr. Client, we're going to accelerate your policy by 1.5 million, meaning that your policy is going to drop by that amount. However, you're only going to take home 1 million or 1.2 million, or maybe even 800,000. So that's where the carrier has to take out their charges. Does that make sense? And I'm going to show you guys some examples, because me telling you and you not seeing this on the board or on the screen are two different things. I'm actually putting some of you guys to sleep. So I want to show you guys the examples so you guys can see some of this firsthand. And again, the examples that I'm going to show you guys later on, you will be able to show your clients. Because again, if you're just explaining it to them verbally, they're really not going to be paying too much attention. When they actually see it visually, that's when it really has a bigger impact. Make sense?
Yes.
So another thing to mention too, chronic illness cannot be added on the same policy with the long-term care rider. They're too similar. It's either one or the other. But you guys are saying, well, wait a minute, you said that Transamerica can do long-term care and living benefits. Yes, we can. That's where the critical illness rider comes in. The critical illness rider, because of this maximum amount of 90% of the death benefit, up to 500,000, it's a lot less than the 2 million on the long-term care rider or 1.5 million on the chronic illness. It's a lot less. But because of this, you're actually able to offer your clients additional coverage. By the way, I like to refer to the critical illness as the little brother or the little sister that can tag along with its older brothers of long-term care or chronic illness. Because critical illness can be added to the same policy with either long-term care or chronic illness, like I said. So let's look at an example of how this would actually be used. First, we want to pay attention to this. Don't worry about that up on the top, because the critical illness, the conditions that critical illness includes do not apply to California. In California, we want to pay attention to this. And this says that the insured must be diagnosed with a medical condition that would, in the absence of treatment, result in the insured's death within 12 months. Let me give you an example. I walk out of here, as I walk down these stairs, because you guys are on the 4th floor, which maybe your elevator isn't working, so I have to walk down the stairs. As I'm going down, I suffer a heart attack. I go to the hospital. Doctor says, Mr. Diaz, you actually have to have, you've got you need a valve replacement, so we need to perform surgery. Without that surgery, you're not going to survive. I say, go ahead, do it. They do it, and then after that, I may be incapacitated, and I've actually checked this with some nurses. They said that I may be incapacitated. I may not be able to perform 2 out of the 6 activities of daily living, but chances are I will not be incapacitated for 90 days. I may be only incapacitated for a month, 2 months, something like that. Therefore, if I only have the long-term care rider or the chronic illness rider, I wouldn't be able to accelerate those benefits and only pay out my medical bills. But because of that surgery, because without that surgery, I would have passed away within 12 months or less, possibly even that night, then this critical illness absolutely kicks in. I would be able to take advantage of this acceleration of up to $500,000 to pay my medical bills. And by the way, the critical illness rider kicks in immediately. There is no waiting period. The only waiting period is that the policy has to be enforced for 30 days. That's it. But again, also remember, keep in mind, because it's a free rider, the client will never receive $500,000. They will always get it because of the discount applied. Make sense? But if you can offer your clients some additional solution, some additional protection, besides the long-term care rider or the chronic illness rider, and it's free, why not do it? You can let your clients know, look, you don't want to be in the position later on, 20 years down the road, possibly, where a client says, hey, I suffered a heart attack, I almost died, but I made it. I can't use my chronic illness or my long-term care rider. Is there something else I can use? You don't want to be the one to tell your client, Mr. Client, unfortunately, you know what? We didn't elect the critical illness rider, so we can't do anything for you. Instead, you want to make yourself look like a hero and say, you know what, Mr. Client, yes, we did add that onto that policy, and if you want to, we can call Transamerica, we can look into how much they could actually accelerate, and then you can make a decision whether or not you want to continue with that claim. Does that make sense? Also, by the way, with either the critical illness or the chronic illness rider, because they are free, when a client goes on claim, they will have to be paying premiums on the remaining death benefit. Remember, with the long-term care rider, when they go on claim, premiums are waived. They don't, it's not waived, but the client is not required to make any premium payments. With chronic illness or critical illness, they're absolutely required to pay premiums on the remaining death benefit. Does that make sense?
Yes.
So just that, those are things to keep in mind when you're trying to convince your clients to either get the living benefits or the long-term care rider. Make sure you give them all of the information up front so they can make an informed decision as to which way they want to go. Either way, always include this critical illness rider. It's not costing them anything, and it's their choice later on whether or not they want to go through with the claim. Does that make sense? Mm-hmm. So, by the way, also with the chronic illness or the long-term care rider, chronic illness, you only need a life license for. With a long-term care rider or even a long-term care policy, you need, in the state of California, you need to be life and health licensed. So whenever you're looking at your business partners, or whenever you're trying to get that business partner, make sure that they get their life and health license. So now I want to show you guys the examples, because this is what really brings it home. This is what really puts it into perspective for your clients. So we've got Michael, and please don't take this out on me. It says up here that Michael is 38 years old, but he does not look 38. Okay? That's my marketing team. I got to have a little talk with them. They're supposed to be giving me some updated slides. But anyway, Michael gets Preferred Elite, and he has a $300,000 policy. He has a stroke, which leaves him unable to perform at least 2 out of 6 ADLs for 90 consecutive days. With the chronic illness rider, it says, Transamerica says, Transamerica says, Michael, the effects of the stroke fall into the severe category, meaning there's an 80% reduction in your life expectancy. Michael, we're still going to accelerate 24% of the death benefit, which is 72,000. But Michael, just remember, this was a free rider. You were only paying $262 a month. You're getting, your policy is being reduced by 72,000, but you only get to take home 55,613. Now, in that case, you can say, well, you know what? That's not too high a price to pay for what happened to him. He still gets to take home a large chunk of that benefit, right? That's not too bad. But again, this is a severe category. It was a free rider, but when you look at the long-term care rider, same situation. He was only paying $25 more, but he gets to take home the full 72,000. Obviously, it's getting paid out on a monthly basis because with the long-term care rider, it has to be paid out 2% monthly. So he's getting paid $6,000, which is on an annual basis. It's $72,000, but he gets to take home the full amount. So again, the difference between the two is that with the long-term care rider, you're paying a rider charge, but you know exactly what you're going to get once you go on claim. With chronic illness or critical illness, you don't know what you're going to get. Depends on the severity. Again, the severity, how it affects your life expectancy, and how long you've had the policy, right? Again, we're looking at a severe case. What happens with something that isn't so severe? A mild case, maybe, right? Would you guys like to see that?
Mhm.
So we've got Cindy. Luckily, Cindy does look 32. Cindy has a $250,000 death benefit. She actually is involved in a serious car accident. She can't perform 2 out of the 6 ADLs for 90 days. With the chronic illness rider, Transamerica says, Cindy, the effects of your injuries have a minor impact on your life expectancy, only reducing it by 20%. Transamerica says, Cindy, we're still going to accelerate 24% of the death benefit. However, you will only get to take home $10,000 and $10,724. Remember, Cindy, this was a free rider. You were only paying $166 a month. Now, luckily, Cindy has the option at this point. Once Transamerica shows her this is how much she's going to take home, and that's how much this is the amount that her policy will drop by. She has the option to decline the coverage or decline the claim. She can say, you know what, leave it alone. I'd rather save it for a more severe incident. Does that make sense? But does this not put it more into perspective about why those chronic illness riders, or why that chronic illness rider can be a little bit more costly than a long-term care rider?
Yes.
Same situation with the long-term care rider. Her premium has only increased by $21, but again, she gets to take home the full amount. Doesn't that make more sense?
Yeah.
And again, these examples, we have these examples in a brochure that you can absolutely show your clients when you're sitting across that kitchen table. So do these examples help you out, help put into perspective what we were talking about?
Yeah.
The difference between the long-term care rider and the living benefits? Great. Are you looking at me like you want to ask something, or you good? Okay. Now, one of the things to mention is that Transamerica has been in the, like I mentioned earlier, Transamerica is one of the few carriers remaining that offers a standalone long-term care policies. So Transamerica has been in the industry for over 25 years on the long-term care side, so they know what they're doing. I do want to give you guys, before I actually end, and actually give you guys a little bit more information about some other stuff, I want to make sure that you guys take down this information. Whenever you need any info regarding the stuff that we just talked about, or regarding any of our other products, our term products, or maybe some details about our FFIUL, or maybe you want to ask about the basics, you can always call our sales desk. They're available from 5 in the morning to 5 in the afternoon. And that number is 800-322-3796, option 5. They can answer all of your questions. If for whatever reason you can't get in touch with them during the day, because they may have a little bit of a wait time. Most of the time, though, they don't. We're looking at 2 or 3 minutes, not too high of a wait time. I know how hard these guys work, and I know the information that they have because that's where I cut my teeth. I know exactly the type of information that they can provide. They're great. I absolutely recommend giving them a call. They can also help you out with illustrations. If you need an illustration right away and you're at somewhere where you don't have access to a laptop, or maybe you don't want to run it on your phone, give them a call. They'll send you the illustration right away as soon as you guys are done. Also, I do recommend going to this website, tldlearningcenter.com. That has a lot of tidbits on long-term care, app to paycheck. Maybe you want to know how that works. We've also got information on how to act, some great examples on running illustrations, some good information on CVET versus GPT. You can always go to that website. And by the way, that website is a public site, meaning you don't need a login and you don't need a password. We don't recommend you giving it to your clients, but it is available. And now, lastly, the information I'm going to show you guys on this last screen is something that is only available with Transamerica. And this is one of the things that they hired me on to do to make sure that everybody knew about this. Now, this is something that I can definitely tell you that is unique to Transamerica. And that's my contact information. I should have told you guys to get your phones out. But please make sure you get my email address. That's the most important one. My phone number, I'm not always that easy to reach. I'm typically doing trainings or traveling, so I'm not always available. Email would be the best way. If you're going to reach out to me, typically you want to reach out to me for escalations. Depending on how Lam and Lena actually run their office, you may have to run things by them. But if you do end up reaching out to me, it's for an escalation. Something gets stuck in new business for too long. The APS is taking too long. There may be some issues with the PHI. Whatever the case may be, if it's an escalation, you can send me an email with the policy number and I'll look into it. Make sense? One of the things that I want you guys to know is that I am here for you. I'm committed to helping you guys out. I've been with Trans for over 15 years. I don't plan on going anywhere anytime soon, unless I get a heart attack on the way down the stairs. But just want to make sure that you guys are aware of who I am, make sure that you guys have me as a resource. Lam and Lena, they have my information, should you guys not get this later on. Does that make sense? Yeah. Awesome, guys. Well, thank you guys very much. This is my presentation.
Appreciate it. He made a long drive here, and he said it's not too bad. You know, you're coming from like the Walnut area? Montebello area. So
Not too bad.
I was like, not that bad, right? So was it an awesome training?
Yeah.
Let's give a one more big round of applause. And you have your flash drive, right?
Yeah, I got it.
All right. So with the remaining time, what I want to do is I want to piggyback on everything that Cesar has talked about today and do a review with you guys on illustration, because it's very important too that all of these things that you guys see, I want to put it back into perspective that, hey, this is how policies look, etc. And so I want to share with you guys that some of you guys who've been here longer, it's a review for you, but can you train on it? Can you teach? Can you present? Right? So we got a few new faces, right? Maritza, brand new, right? So we got a couple of people who are brand new that I want to kind of share this with. And I already had one saved, so give me a second.
Hey, Lam, while you're doing that, can I just mention one more thing?
Absolutely.
One of the things that I forgot to mention while I was up here was a new program that we just introduced. It's the ITIN program. And basically what we can do is we can offer insurance where we can actually cover families now that don't have a social security number.
Oh.
So if they have an individual tax identification number, we have a program for them now. It's the same FFIUL and the same term product. The only difference is that they can't have long-term care or living benefits, and they're capped at $500,000. But it does open up a whole new market for you guys. This way, if you know anybody or you come across any clients that don't have socials but do have an ITIN, we can definitely help them out. Make sense?
Yes.
And I'll send Lam the information as soon as I'm done here, as soon as I get back to the office. Okay?
Okay.
Awesome.
Thank you for adding that too, because that might be like a certain families and all that we work with and we help with who don't have that, right? So it's absolutely important. So let's talk about some of this stuff, right? So all of that's pretty awesome. Let's break it down to some of these numbers and share with you some common cases and all that too that we have. And this is one of my default illustrations that I have for people out there. All right. So when I sit down with a client, I like to explain to people how each column works and how it looks like, and all the potentials that you have, because it is a product that can have a lot of really good parts to it, right? So Cesar mentioned the long-term care, the critical illness, and all that. But the part that you didn't get to see yet is the cash value, right? The cash value and the numbers in which you can utilize the money. And so I want to share with you guys this why it does that. All right. Better? I think it should be good now. Okay. So that's just focusing on the cash portion of the product, right? We're trading a small amount of money for a large amount of money back. And guess what? Non-taxable. Non-taxable, right? So let's walk you guys through some scenarios of this guy's life, okay? So let's say that after 3 years, how much money has he put in so far? 36,000. Knock on wood, this guy dies, like a car accident. I've seen that happen so many times in Southern California, right? It's sad. So car accident, how much money goes to his family? 531. That's pretty cool. Another thing, a lot of people think that long-term care means you got to be old. Do you have to be old to need long-term care? No. So let's say this guy in his 3rd year, right? He goes on a skiing trip, and then he crashes into a tree. Okay, he broke both his arms, his leg. You guys seen that happen, right? And he is not functioning, right? Not being able to function for an extended amount of time. Let's say for a whole year. It takes a long time to recover. Guess what? He has up to how much? 531,000 that he can utilize towards long-term care costs. How much money did he put into the policy so far?
86.
You see that benefit for the client? You've only put in how much? 36,000, but you're using $500,000, right, up to like that amount to pay for those costs. You guys see it? The benefit of this product? So there's all these different scenarios that can happen in life. I don't know what's going to happen. I don't think any of us knows what's going to happen. But this is a type of product that can cover you in a lot of different areas. That's pretty cool, right? Critical illness, right? So go through life. Maybe you're older, too much, pizza, all that cholesterol. He gets a heart attack here, right? So guess what? Same thing. You can reduce your policy up to a certain amount, which, yes?
Sorry, they said that you accidentally hit muted.
I did. It looks okay to me here. Yeah, it's not muted. I unmuted. Okay.
I think fine, I think so.
Hopefully we have a lot of people who are far away and we're streaming and Utah and all that too. So hopefully they can hear me. Okay. So going back to the example, right? Now, just like the example that Caesar gave you guys, he can accelerate up to a certain amount. The company will calculate how much the client can get, right? And guess what? Do you have to take it? No. You don't even have to take it, right? You can take a portion of it and utilize up to a portion of it to pay for those extra costs and all that. And they're just going to pay you out a certain amount. It's not like you have to be linked to using that money specifically only for medical care, especially when it's critical illness. So let's say that you pulled out death benefit wise, you pulled out 200,000, and then the company keep back like 50,000, and you get like 150,000, right? You don't have to use all 150,000 for healthcare costs. He can use it to go buy a new car. I don't know, whatever he wants, right? The company is just going to write him a check based upon like the amount that they calculated. Is that pretty cool, right? So there's all these things. Now, again, if he does not die, right, which, family can benefit from the money. If he doesn't need long-term care, if he doesn't get critical illness, critical care, then let's just look at it on the cash standpoint, right? He's saving 12,000 a year, 15 years, 180,000 total, right? Gets all his money back, all his 180,000 back, and for the rest of his life, right, living off of this interest, 47,000 tax-free. Isn't that amazing, right? So what other products can you think of that can do that for your clients? That's pretty difficult to do, right? So that's why this product is one of the more popular ones nowadays that a lot of families are using, right, as part of their solution in terms of growing cash. Because a lot of people even ask me, you know what? Oh, I'm 35 years old. I'm not even married. I have no mortgage. Why would I get this product, right? I'm 35 years old. Nobody relies on my income. Why would I need this product? Well, for one, maybe in the future you'll get married, or maybe because you're single, you might need long-term care. There's no wife to take care of you, right? So maybe, right? But cash-wise, it also makes sense for him too, right? Cash-wise, it makes sense for him because there's very few vehicles out there that allows you to grow money that is non-taxable. One of it is a Roth IRA. Let me ask you guys this question. What's the maximum you can put in a Roth IRA per year? 6,500. I mean, it changes all the time. 6,500, catch-up period, etc. How much is this guy putting in? 12. Right? So we can design policies in a manner that you can put more money in, but also design it to be non-taxable. And that's a big deal.
And this one comes with death benefit.
This one comes with a death benefit. It comes with all these other things in there, right? So I just wanted to kind of review with you guys that on the back end of it, when clients are taking a look at this product and putting money in and all that, what they also get as a benefit, not just the coverage, not just the death benefit, not just the long-term care and all that, but also the cash portion. I think that's pretty cool too, right? And non-taxable cash, that's pretty cool.
And you still have death benefit.
And you still have a death benefit. After you enjoy all this money here, you still have death benefit.
170.
There you go. And we can design it. If they want more death benefit, we can design it so that they can have more death benefit and all that. This is just maximizing withdrawing a good amount of cash, right? So that's the cool part about these policies. Questions? How about new people? Questions? Maritza, questions?
I don't have, I'm just learning right now.
I know you're learning, but pretend that I'm showing this to you as a brand new person who's never seen it. Was everything I say here make sense, or is it confusing, or?
No, it makes sense.
Okay,
It
so
makes
far?
sense. So far, yes.
Okay, good. Edwin, makes sense? Oh man, you guys gotta ask me some questions.
What's the name of the program?
It's the same program that Caesar just showed you,
Okay.
the FFIUL. Yes,
So
we're good to
it's
go.
life insurance, right?
Yes. So isn't it crazy? Life insurance, but you're getting your money back, and you're getting all this interest off of it. $47,000 a year. Has anybody showed you that before, Maritza?
Yes, somebody from Hartford.
Oh, there you go. This lady is pretty cool. Yeah, and we have Hartford, by the way, too. So
Oh, we do?
yeah.
Yeah, but the thing is, I bought life insurance and I didn't understand a lot of products or anything. And I never heard of the agent again after a few years.
That's
So
right.
I don't know what happened to that money. I have no idea.
Thank you for sharing that with us too, because that is so common nowadays, right? Where agents don't follow up, agents don't explain, agents don't educate and teach. And that's part of our KTP is we explain why we're different. So why we're different, even I had a KTP yesterday, you know, the agent, the family asked me, well, you know, I'm gonna buy your product, etc. Then I never see you again. I said, no, we do annual reviews. We meet with you all the time. We take care of you. I'm here whenever you need me. And so we're a lot different than the traditional types of companies out there, right? And so a lot of times they don't even explain how these things work. They just say that this is what it has, it's good. But we literally sit down and thoroughly explain this for clients out there. So thank you so much for sharing. Let's give Maritza a hand. All right, my time is up, and I just wanted to share with you that quick story. Who's doing meeting after meeting?
Ray.
Ray, let's give Ray a big round of applause.
So did one do a good job?
Oh, yeah.